Hello everyone, I am Arnaud Delapierre. In this video of April 30th, 2025, we review the news of the financial markets from the last 24 hours, which have been particularly eventful. On the agenda, a comprehensive overview from Wall Street to Asia, including Europe, with a focus on sector trends, major economic indicators of the day, the latest company results, central bank decisions, and the evolution of currencies and commodities. Settle in comfortably. Here is your daily update on finance. Last night, Wall Street ended mixed. The Dow Jones lost a few fractions under the weight of industrial stocks sensitive to trade tensions. The S&P 500 remained almost unchanged, while the Nasdaq gained nearly 0.5%, driven by technology stocks. Investors welcomed the good results of some tech giants, but remain cautious in the face of mixed signals from the economy. The prospect of a possible pause by the Federal Reserve in its interest rate hike policy provided some relative support, without eliminating all uncertainties. European stock markets experienced a mixed session on Tuesday. The CAC 40 remained almost unchanged in Paris. Gains in defensive sectors such as luxury or health offset the decline in industrial stocks exposed to exports. In Frankfurt, the DAX fell by about 0.2%. Weighed down by concerns surrounding international trade and declining investor morale. The Eurozone Economic Sentiment Indicator has fallen to its lowest since several months in April, which has dampened hopes of recovery. However, some good results from European companies have limited the damage. In certain sectors, the current volatility highlights the importance of being well equipped to navigate the markets. In this context, I will take a brief aside to mention an app that I use daily, and that I often find impressive. It's called Notrade, available for free on iOS and Android. Notrade is a powerful tool for getting trading signals. The app analyzes the asset of your choice over different time frames and gives it a score from 0 to 100, indicating that it's rather time to buy or sell, or why not even stay in, waiting. It also offers a community chat, many other functions. Really, I'm impressed. It's nice. Go check it out. In Asia this morning, the market shows a mixed trend. The Nikkei in Tokyo gained 0.3%, supported by hopes of the Bank of Japan maintaining its monetary policy. Conversely, Shanghai lost 0.8% following the announcement of a Chinese manufacturing PMI falling back below 50. Sign of economic contraction. Hong Kong followed suit. The Hang Seng Index declined in the wake of the retreat of major Chinese technology stocks. In India, Mumbai's Sensex Index reached a record, benefiting from the drop in oil prices, which eases pressures on its economy. Sector trends reflect the contrasting dynamics of the economy. The sector technology is doing well, driven by strong results and the hope of rate stabilization, which benefiting digital stocks and semiconductors. Conversely, the energy sector is slowing down. The recent drop in oil prices is weighing on oil and mining stocks. Banking stocks are also declining, weakened by the prospect of a slowdown in bond yield declines, obviously, which erodes their margin. In contrast, defensive sectors like healthcare and utilities are faring better in this uncertain climate. Yesterday was also marked by several important economic indicators. In the United States, consumer confidence significantly deteriorated, falling in April to a nearly 5-year low, indicating growing household concern, while job openings plummeted, reflecting a labor market that relaxes. In Europe, inflation is gradually slowing towards 2%. But the business climate still remains fragile. In China, manufacturing activity unexpectedly declined, PMI index below 50, raising concerns of a slowdown in the industrial recovery. Earnings season is in full swing on Wall Street, as you know. Yesterday, Visa announced profits exceeding expectations thanks to increased consumption, which supported the financial sector, while for example, Starbucks disappointed with a profit decrease of nearly 30%, undermined by rising costs. Optimism remains for the tech giants. Investors are betting on strong announcements from Meta and Amazon, expected soon, after the good start by Microsoft and Alphabet earlier in the week. In Europe, the earnings season also offers its share of surprises. HSBC, the large British bank, announced a jump in its quarterly profit, benefiting from high interest rates that support its financial margin. His stock reacted positively on the London Stock Exchange. On the industry side, we can also talk about some groups showing resilience despite the difficult circumstances. I'm thinking of the German software giant SAP, which exceeded expectations and saw its stock soar after strong results, illustrating the potential of European tech. Conversely, more companies, cyclical companies, remain cautious in their outlook, reflecting the uncertainties of the moment. Central banks are closely watched by the markets as always. The Federal Reserve meets next week, and the markets anticipate a pause in rate hikes. That's already not bad. Maybe even an easing by the end of the year. If the economy weakens further, for its part, the ECB remains cautious. After these successive rate hikes, it does not rule out lowering them if growth is weakening. The Bank of Japan, on the other hand, does not deviate from its ultra-accommodative policy. Currently meeting, it should maintain its negative rates and yield curve control, keeping the yen under pressure. On the foreign exchange market, the American dollar has slightly weakened against the euro. We are around 1.12, 1.13 at the time I'm making this video. The European currency is thus trending while the Japanese yen remains weak, close to its several-month low. The Bank of Japan now, an excess of liquidity is evident. The British pound, on the other hand, shows little change. In contrast, emerging market currencies are under pressure in the risk-averse climate caused by the well-known trade tensions. Finally, the Chinese yuan is declining, affected by concerns about the economic slowdown, of China. The economic nervousness is also reflected in commodities. Oil prices have significantly dropped in recent days. Brent crude is fluctuating around $75 per barrel, clearly down, restrained by concerns over global demand despite decisive cuts by OPEC+. Conversely, gold is benefiting from its safe haven status. We're still looking at an ounce of gold that recently almost hit $3,500. On the industrial metal side, copper is weakening a bit, impacted by the manufacturing slowdown in China as the month of April comes to an end. The monthly market report appears mixed. In Paris, the CAC 40 is expected to show a gain of around 1% for the month, driven early in the period by the calm in the banking sector, but hindered at the end of the month by the resurgence of trade tensions. On Wall Street, the American indexes are heading towards a monthly report close to equilibrium. They erased their gains due to renewed economic concerns. Volatility remains high, but the markets demonstrated resilience despite successive shocks. This mixed performance illustrates the persistent nervousness in the market. The coming days are expected to be busy. Tomorrow, the 1st of May, many stock exchanges will be closed for Labor Day, which could lead to a lull in activity. But by Friday, the focus will be on the United States, with the release of the much-anticipated monthly employment report for April, an important barometer to gauge the health of the American economy, quite simply, and guide the Federal Reserve as well. Moreover, the earnings season continues. Apple has to reveal its accounts tomorrow evening, an event closely watched by investors. Finally, trade and geopolitical tensions will need to be closely monitored in the coming days with all the events we know of at the moment. In short, financial markets remain torn between hope and uncertainty in this turbulent context. I hope this overview has helped you see things a bit clearer. Thank you for watching this video until the end. If you liked it, feel free to leave a thumbs up and subscribe to the channel to not miss any of our other daily analyses. Share your feedback in the comments. I will be happy to read them. And of course, we will meet again tomorrow for a new market update. Have an excellent day, everyone.